Thank you very much, Professor van Hulle. You already addressed a few points I'm going to speak about. My name is Gepa Jansen. I'm working in Swiss Re's Munich headquarter, and I have the pleasure to be in charge of Azerbaijan and the entire CIS region since about 12 years. I'm very, very grateful to the hosts for organizing this conference and for inviting me to beautiful Baku. It's my third time to this great city, and it keeps developing. I'm always impressed. I'm going to speak a little bit about observations and the recent analysis of Swiss Re on climate change. If you are interested in more information or more figures, I brought a few of these publications. And then I'm going to share what this means on insurance and reinsurance terms and what it might mean or what we have observed as impact for Azerbaijan. Please interrupt me anytime. Let's make this as interactive as possible. We are here to learn from you, and if anything is wrong in my statements, if you have a different opinion, please speak out. I would be grateful for that. Yeah, a few words about Swiss Re, just in case you don't know us. This is our headquarters in Zurich. We are a leading reinsurer worldwide with a premium volume of 45 billion US dollar last year. Yeah, as Professor van Hulle already said, a lot of risks remain uncovered so far. We have calculated that 75% of worldwide risks are not protected at the moment, and our mission is to change that. Swiss Re is presented worldwide with approximately 15,000 employees. We are covering all continents, and yeah, Azerbaijan and the region is handled in Munich. I'm always happy to see you there. I have a few colleagues working in Zurich also serving this market. Now, I think this is enough about Swiss Re. If you want to know more, please approach me during the break. Yeah, let's start with our recent observations on climate change. According to our analysis, 36 countries in Asia, Europe, Northern and Southern America were again affected last year of major weather perils like flood, hurricanes and storms. This caused an economic loss to property of 200 billion annually. So that's the annual average. So from the top of your mind, which kind of natural catastrophes can you remember from last year? Earthquake, definitely. Anything else? Exactly, floods. I've seen we also have a few guests from Kazakhstan. I mean, you have experienced a very severe flood recently. Yes, I mean, as human beings, we tend to forget about catastrophes quickly. That's just the way we are built. So let me just remember you of the 142 insured nat catastrophes we saw last year. So these were just the main events. The most costly event was the earthquake in Turkey and Syria, which caused an economic loss of 58 billion US dollars. Do you have any feeling how much of this was insured? Perfect, perfect guess, exactly. 90% was uninsured. So the estimated insured loss was just 6.2 billion US dollars. The other events were mainly caused by so-called severe convective storms. And when we talk about severe convective storms, we are thinking about hails, straight line winds, tornadoes. And they have in fact become the second largest loss driver behind tropical cyclones. But if you look at this map, you also see that other perils deserve an updated view, like for example, wildfires, which are not only occurring in the US and Australia anymore, but we've also seen them in Europe, Hawaii, Canada, and with rising temperatures, they will likely become more frequent. Further, there were floods in Italy, Greece, Slovenia, India, Hong Kong, New Zealand, and others. There were also floods in regions where you would probably not have expected it. I mean, we have just this year seen a severe flood in Dubai, which is maybe when it comes to climate a bit closer to your country. And also we have seen a very severe hail in Abu Dhabi. So the message of this picture is the only way is up. We really observe a structural shift to more weather-related claims. And some perils react more to climate change than others. I will come back to that a bit later. There's a lot of information on this slide, and you will get the slides afterwards, obviously, so you can study them a bit more diligently. The main message is relative to GDP, we estimate that the insurance loss burden from catastrophes has more than doubled over the last 30 years. And if we extrapolate this trend, it's a long-term trend of 5 to 7% increase. We estimate that today's loss burden could double over the coming decade. And that is, of course, also due to economic growth and urbanization and the accumulation of assets. I mean, every time I'm coming to Baku, I'm impressed how this city is developing. But of course, all these new skyscrapers and fancy buildings also mean a lot of insurance or a lot of value concentration. Again, on this slide, you can see that less than half of the entire economic loss of 275 billion was insured. So there's a lot of work for all of us to be done on the protection gap. Now, let's talk a little bit about secondary perils. Reinsurers love to talk about secondary perils. And what do we mean by that? So for a long time, we were mainly looking at the peak risk, the primary perils. So that was the famous peak risk, like earthquake in Japan, winter storm in Europe, earthquake in California. And these scenarios have been modeled very well. Reinsurers collected a lot of data, invested a lot of time in modeling them correctly. So they are well known to us when it comes to severity, frequency. But then we observed that so-called secondary perils are more and more frequently causing claims to us. And this can be, for example, hail. It can also be a tsunami or fire following an earthquake. It can be wildfires. And we need to get a grip on these perils. Because the problem we are facing that there has been a significant difference between the expected loss and the actual claims expenses. And in the long run, as we all know, the premiums must cover the claims we pay out. And this had not been the case for secondary perils over the last decade. And this was one of the reasons why reinsurance premiums went up over the last 2 years. And I will also come back on this reinsurance development a bit later. In addition, we have seen a new phenomenon which we call loss creep. So even in short tail business like property, we see that losses keep increasing. And so normally if you have a property loss, you would think after 2 or 3 months, you know the exact loss or you have the correct reserve set. It has been not the case in many countries. To give you just one example, last year in August, there was this very hot long and hot heat wave in northern Italy. And it finally broke into a dramatic hailstorm. There were hailstones of this size, 13 centimeters. And of course, they smashed windows, roofs, caused a lot of damages. It happened in August. In September, we got the first loss estimate. Meanwhile, until today, this loss estimate has tripled. Also, this was a property claim. And also, not only Italian drivers were affected, I'm also in charge of Denmark. My Danish clients have huge losses from this Italian hailstorm because it happened in August and there were a lot of tourists on holiday in Italy. And of course, when there is holiday season, there is a lack of loss adjusters, of craftsmen, of builders. And that's why we have this loss creep, because it took much longer to repair houses, cars, and so on than anticipated. So the climate change has different impacts. Some perils are more prone, more exposed to climate change than others. I mean, very obviously, heat waves, droughts, water scarcity, wildfires, they are, of course, more driven by climate change. Generally, as you might know, 1% higher temperature means that 7% more moisture can be stored in the air. And that, of course, causes heavy rain and cloudburst. Do you have any questions so far? Any comments? Before we have a look at Azerbaijan and what all this means for your country? Please interrupt me anytime, okay? So what about Azerbaijan? I've had a look at a report of the World Bank Group, and there is this so-called ND Gain Index. It creates a score for 181 countries and calculates their vulnerability to climate change and other global challenges, and also how well prepared they are to improve their resilience. So the lower the score, the more vulnerable a country is. As you can see, Azerbaijan is ranking 73rd, so you're in the middle. This World Bank report also projects that temperature in Azerbaijan will rise at a faster rate than global average, depending on the different emission scenarios, so depending on how the world will react to climate change. The worst case scenario is that up to the 90s, you will have a temperature increase of 4.7% yearly average, and in summer even 6%. I enjoyed the heat this week in Baku because in Germany it has been very cold and rainy, but if it gets even hotter, I think it will be difficult to enjoy it. So while the consistent warming will likely lead to a reduction of precipitation and will increase drought throughout the year, there's also an increased likelihood of extreme rainfall events, something we have observed in many countries in Asia and elsewhere. In some cases, this can also lead to landslide. For example, we have seen a loss from Georgia, which was ceded by a client to us in a, I think it was a mountain village. The village was not big, but there was quite a nice hotel there, and it was totally damaged or even disappeared after a landslide following heavy rainfall. Now, I've learned that Azerbaijan has 9 different climate zones. So I guess temperatures and precipitation vary a lot between the different regions and altitudes. So may I ask you, would you agree that in Azerbaijan, increased rainfall events will be more likely? See people shaking hands as your heads. Have you seen any such strong rainfalls already in the past? Or are there any areas where you would say they are prone to it? And are there any high value concentrations there? So far it doesn't seem to be a big problem. But I mean, we have really seen that quickly changing, and probably in Dubai, nobody would have expected such a rainfall and such a flood as they saw this year. Now, on this picture on the left-hand side, you see a picture of Baku during Soviet times and Baku nowadays, and we can all see the increased value concentration, all the new buildings there, lots of values, and that of course also has a dramatic impact of losses once it's insured. If it's uninsured, that is another problem, but if it's insured, of course this has a dramatic impact for insurers. And on the right-hand side, you can see a development of a US claim, which by 1 year increased by 8%, and the calculation is based on 2.2% economic development, so growing property values, growing insurance penetration, 1.2% for claims inflation, because with spare parts are more expensive, higher repair costs, then more concentration in exposed areas adds another 2.3%. Then the climate change adds 1%, and 1%, 3% is caused by societal trends, it says here, hidden loss drivers. To give you just one example, in my street in Munich, 5 years ago, nobody had solar panels. Now, every second neighbor in my street and also my family, we have solar panels on our roof. So if there is a hail, these solar panels are damaged, and we have seen really very expensive losses from the solar panels. So that would be one trend, just to give you an example. In fact, what we observe is the factor needed most after a serious event is people and building material. And there has been a lack for both of it. They can be very scarce due to supply chain problems, also because there's not enough craftsmen, not enough human resources. So securing raw materials and claims adjusters and to make sure you get them from other locations is key. The lack of available loss adjusters after large event has been an underestimated problem worldwide. We have another report on that phenomenon, and we've really seen that our cedents have been negatively surprised by this development. So be sure to have a proactive emergency plan to respond to a 10,000 claims event, a 50,000 claims event, and to your personal worst case scenario. Now that's another very busy slide. The main message to remember is the warming continues. And understanding how natural hazard shape risk landscape is critical. There's no alternative to climate adaptation and to risk mitigation. Give you another example. In 2011, Copenhagen, the capital of Denmark, faced a totally unexpected huge flood following a very extreme cloud burst. Very heavy raining in very short of time. They'd never seen anything like that. And the whole inner city, old town, everything of Copenhagen was totally flooded. It was one of the most expensive hail losses we have ever seen. Meanwhile, since 2011, they have changed everything. You will see floodgates, flood protection everywhere in Copenhagen. If there is a new parking garage being built, there's always a basin to collect the water, so the cars are not running anymore. You will see they have much more pumps in the city. They've also invested into education, into awareness of the people. Another example is that the IT departments in companies or in Tivoli, the amusement park, they've just been moved from the ground floor to the top floor. So it's things like this. And yes, this has made Copenhagen less vulnerable. And yes, it has been reflected in reinsurance rates. Reinsurance rates were decreased because we all saw the same flood would not cause the same large loss we had in 2011. So I think it needs mutual efforts, not just insurers and reinsurers, but also the municipalities, for example, can invest here. Any questions before we have a closer look at reinsurance? Can I ask you, who of you in the audience is in charge of buying reinsurance? Maybe you raise your hand. Okay, so then you have probably seen the trend I'm describing now. So over the last, probably over 10 years, reinsurers in general have not been able to cover their cost of capital and even less satisfy shareholders' expectations. Terms and conditions had deteriorated over 10 years, resulting in structures which were providing more and more cover designed for earnings volatility rather than for capital preservation. Also, the contract wordings had been broadened and stretched continuously. Retentions had not been adjusted in spite of growth and in spite of inflation, and this led more and more to an imbalance split of large losses between cedents and reinsurers. So we saw that most of our clients still had very nice annual balance sheets while reinsurers absorbed the losses. Now in autumn 22, we had this Hurricane Ian in Florida, and this was just the last straw to an already very active nat cat year. And then suddenly the whole market changed. And I guess some of you who are buying reinsurance remember that extraordinary time. And I also know we have a couple of brokers in the room, and I really didn't envy them that, because I think it was a mess. It was an extremely late renewal, very unorganized, unpredictable. But as a result, property rates went up, both. For loss-free, probably they went up by 5%, up to 20%. If a treaty was loss affected, it was even more than 20%. Retentions were increased. We wanted to see return periods of at least 1 in 5, but even preferred 1 in 7, 1 in 10. Reinstatements became paid. The rate on lines for cut top layers increased. There was no more capacity at 1% rate on line. And on the client side, we observed a flight to quality. So clients really wanted to have long-term, stable, A-rated reinsurance partners. And there were considerable budget change. I remember that many of our reinsurance managers buying reinsurance said, I had to go back to my management not once, but twice or even 3 times to ask for a higher budget. And I can fully understand that this is an awful situation. Now, what we have seen this year was a bit more orderly, a bit more predictable. As per 1/1, we have seen a very high underwriting discipline from reinsurers. We've also seen that these increased retentions led to a better alignment of interest between insurers and reinsurers. We want to be shock absorbers. We don't want to collect all the frequency claims, because you as insurers are much closer to the original risk and just know it better than we do. And we also see that it helps if you have a clear loss occurrence clause, which then in case of a major event, immediately is transparent how these losses are ceded. Now, how can we make Azerbaijan more resilient? I think if I look into the room today, the audience already shows a very good example that we need a lot of diversity here. So it cannot be done only by insurers and reinsurers. We need public entities, we need governments, regulators. They are as much as the driving seat as we are. What Swiss Re is doing, and I'm aware that many reinsurers, also some of our peers, are also doing it, we try to tackle it from different angles. The first one, obviously, is to offer traditional reinsurance capacity to you. But the second one is also to team up with public sector, so with government, for examples. Swiss Re has a dedicated team, and just to give you another example, we have teamed up with the Kazakh Ministry for Agriculture, and with them are providing a parametric drought insurance protection scheme, which basically protects all Kazakh farmers. We are also supporting renewable energy projects, and we have also done something similar in Morocco, for example, with our public sector solutions team. So this is really to make societies more resilient and to protect also critical infrastructure. And the third pillar is insurance solutions, and I will soon hand over to my colleague Normen, who is working in our headquarters in Zurich, and he is in a very innovative team providing insurance solutions to our clients who are data driven, they are very tech driven, and that try to help you mitigate climate risk to get your underwriting right. And I think this is very important because we somehow need to keep insurance affordable. I've now shown you a lot of scenarios why reinsurance is becoming more expensive, but we need to get a grip on the data. We also need to prevent claims to make insurance affordable for all of your original clients. And to assess the regional exposure to any kind of nat cat events, you need a reliable underwriting tool, which will be shown by my colleague Normen, especially, by the way, when you target business outside of your home region. This brings me to my last slide. A picture is from Baden-Baden, where I always enjoy seeing some of you and discussing your insurance terms every year in October. Yeah, what I would like you to remember as my key message is, though Azerbaijan's and also I think Georgia's, Kazakhstan's main exposure is earthquake, climate change will also increase secondary perils here, and they've been underestimated in the past. So to avoid that we underestimated these claims, we need data as granular as possible. And we also have to prepare ourselves for large events by planning, building materials, and a proactive emergency plan for such an event. Thank you very much. In case there are any questions or comments, objections, happy to react. We can also talk later. Otherwise, I would pass on to my colleague Norman, please.
Gepa, thank you very much. Welcome, everyone. Hello. Thank you very much for having me. Okay. Sorry, you see, I'm not on a stage so frequently like Gepa. She managed it immediately. So as you can see, I'm here to learn also from her and from her experience. Ladies and gentlemen, our climate is changing. Our climate is changing rapidly, and with it, the nature of flood. You might think, why are we talking about flood? I hope if you have listened carefully to what Gepa has told you already, you know by now why you should pay close attention right now. Because for us, as the main players in the insurance industry, we are obliged to develop and to evolve beyond our common practice and take into consideration novel data sources to really mitigate one of the most destructive perils globally, which is flood, affecting currently a third of the world's population. My name is Normen KLÖPPERPIEPER. As Gepa told already, or said already, I'm based in Zurich. I'm a so-called Senior P&C Solutions Manager at Swiss Re, which is a nice title, but basically it says I have the privilege to help our clients in a very diversified region of Northern, Central, and Eastern Europe to tackle and address the most challenging opportunities within the industry by applying data insights and technology beyond the traditional risk transfer solutions that you know from a reinsurance company. For the remaining or for the next few minutes, I mean, we are overshooting here our time slot already, I guess. So I will try to keep it short, but for the remaining minutes, we will dive a little bit deeper into the science of flood and how the science has evolved over the last decade, 2 decades, and what that actually holds for you and how you can apply it in your underwriting and pricing to do your job with confidence and improve your capabilities when it comes to flood risk. You have already seen like a lot of facts, so I will not go into it. Just maybe one highlight. According to our Swiss Re Institute, flood is now the world's most prevalent natural disaster, impacting a third of the world's population. While floods have traditionally been considered secondary perils, climate change is supercharging their impact by making floods larger, less predictable, and costlier. And this data that you see here, you can find it in the publication that Gepa has mentioned. So feel free to pick up one of these issues or download it on our website. I have some QR codes and links at the end of the presentation where you can download it right away with your mobile phone during the presentation. As our climate changes, it's crucial to understand the risk posed by flooding. At present, flood risk is often managed under the assumption that history is a good indicator for the future. But this is not the case, or no longer the case, as we have all experienced just a few weeks ago in Dubai. And what you can see here is actually, we have no pointer. What you can see here is the so-called event footprint of the flood event in Dubai, which was caused by heavy rainfall. You see here parts of the airport and the surrounding city, of course. I think many of you here, at least as I heard, are familiar with the city of Dubai. Not as I am, I have never been there. But nevertheless, what you can see here is the event footprint showing you how deep the water was actually standing in these various areas. And maybe we focus just on the center, the part of the airport which was flooded. And we have all seen the videos and pictures where planes were actually driving through, I don't know, 30, 40 centimeters of water. You can see that here there's a scale and the water was on the runway up to 50 centimeters. So just imagine that, how high it is. And what we can see is no one is expecting that. So this example, amongst others, shows that the very nature of flooding is changing, with floods becoming more frequent, as I already said, severe and particular, occurring in places that have not seen significant flooding in the past. And I have seen some people shaking their heads, I think here in the first row, when Gepa asked some questions related to, do you know areas in Azerbaijan that are prone to heavy rainfall, and do we have some accumulation of asset value in that area? I bet 1 year ago, if we would have asked the same question in Dubai, the reaction would have been the same. And this is the nature of us as humans. We underestimate that, we are biased. There's so much noise and we are biased based on the past that we are not able to predict the future accurately. And therefore, this is our ask here. Trust more and lean more into new and novel data to inform your decision making. Because with the impact of climate change, you will most likely, one day or another, experience a similar situation as the one that we have seen here in Dubai. So as climate changes transforms destructive floods into a primary peril, insurers need better tools to manage this intensifying hazard. As one of the world's largest reinsurance companies, Swiss Re has always and long tracked natural catastrophe loss trends. With climate change contributing to intensifying hazards like extreme rainfall, which was the cause for the Dubai flood, can cause bigger floods. Powerful tools to understand these evolving risks are crucial. We just basically have to get better in predicting what comes, especially when a warming planet makes the past a less reliable alliance to guide us to the future trends. What you have to do for that is you have to take into account new external data sets that luckily are available now and actually supporting us in our quest also to mitigate the various different natural perils globally. So flood is specifically, and why is flood distinct and different from any other peril? Do we have an idea? It's pretty simple. All flood is local. It can be dry on my left side, while it is flooded on my right-hand side. So flooding is incredibly spatially complex. So you need to represent that spatial complexity in the models that you build. And in building those models, you have to represent those local features with high quality data sets from external data providers. And when you try to build models with that kind of complexity at a large scale, not just for a city, not talking about the country, but at a global scale, believe me, that becomes difficult. So how do we build locally skillful models at a global scale? What you can see here is a 5-step process that we and our daughter company Fathom, which we have acquired in December last year, specializing on flood modeling based in Bristol in the United Kingdom, that we follow to actually build locally relevant flood models at a global scale. I will not go into the technicalities. I understand here also you're all insurance professionals, but maybe not necessarily tech, data, and IT professionals. So let's keep it on a high level. What you can basically see here is a 5-step process. First of all, you need really good terrain data. Why is that? Because of the physics of water. Water is flowing down. But if you do not know where the slope is, your output will be pretty bad, most likely. So you need to have the data, and you need to have digital elevation models to actually, at the very basis, to support the other 2 steps. And what we have done is we have invented or developed a world-leading digital elevation model. It's called FABDEM Plus. And this data model uses Copernicus data. Copernicus is a space mission from the European Union that was launched in 2014. This is when we got the first satellite imagery. And based on that imagery, you can actually easily measure on a high resolution the elevation of the terrain that you are looking at. Back in the days, or still like in cities, you often see engineers running around and measuring streets or mountains or hills or whatever, right? We are doing this now without sending any people in the field, right? The issue is these satellite images, they also include rooftops and also canopies of forests and trees. So if you want to have actually a real representation of the terrain, you need to somehow clean up the data and the pictures. You can do that, of course, manually and look at each and every picture at a high resolution of 30 meters and say, like, this is a rooftop, this is a tree, this is a rooftop, there's a bridge, here's something. But this, of course, is not helping you if you are trying to develop a global model. So you are applying modern machine learning and artificial intelligence technologies to really clean the data and come up them with a digital elevation model that is clean of any forests and bridges, giving you the best foundation available currently globally to start the next steps. And as I said, I will not go into the technicalities just so much. As a second step, you have to model all river channels globally, which is challenging. Most likely, not even in Azerbaijan, all river channels are documented. The next step is you have to define boundary conditions, because observations, even in the United States, for example, where you would imagine, okay, it's one of the most developed countries and data is available everywhere and everyone is data driven because they're always talking about it. Even there, we do not have enough observations to actually feed or benchmark our assumptions. Fourth step is you have to plug everything together, of course, into a hydrodynamic model. What is that? This is basically the physics of water and how water flows, because this is extremely important if you want to see, okay, if a river flows up because of heavy rainfall, when does it actually spill over and then flooding other areas, and how does that develop in the region? And step 5, and this is the novel and unique thing, because these individual steps, they are specialized companies that can do that, right? But bringing all of it together in step 5, this is the novel and the unique part that we are bringing in also, and we are bringing that all together in an automated framework, because as I said, you can do that manually, maybe for a small region, for a city that is of relevance, but on a global scale, that would not work. And why, you could ask, why has that never been done before? It was just the data availability was not there, once. Secondly, there was not enough computing power in the world, because you can imagine, first of all, creating a data set like that requires a lot of capacity, tera and terabytes of data that you need. And then you need the technology afterwards to actually work with this raw data and create insights that are then fueling the results. And now if that is not enough to actually model flood in a static world or a static environment, we are now living in a non-stationary system, or we always have been living in a non-stationary system. I have to be careful. We have someone here from academia. I have to be really precise. So we are always living in a non-stationary system, but when we are building models, we actually assume a static system, right? So already by that, it's really tricky and difficult to bring that together. And with climate change, it gets actually, everything is getting even more unreliable. So most flood models assume a stable climate, relying on historical data to predict future floods. However, climate change disrupts weather patterns and intensifies flood, making assumptions unreliable. The question is, how can we understand the environment of the future and avoid potentially serious underestimation of risk? So what we have done, or a viable solution, has to consider different time horizons, different emission scenarios. Gepa was mentioning one already, but there are several, I think by now 12 different official emission scenarios we can look at any given point in time. And it must apply to all forms of flooding, like pluvial flood, and also coastal flood. And that at the same time, at a high degree of geographical granularity by the applicable and be applicable globally. So what we have done is we have developed a so-called climate dynamics framework. Again, I will not go into the technicalities. We can have a fireside chat about it if you want to. But what we are doing is the following. To account for the inevitable multi-layered uncertainties associated with the projection of future climate, we have designed this climate dynamics framework. Given that we can unfortunately not predict what future pathway we will follow, our climate dynamics frameworks allows you to address this uncertainty by looking at all ends of the spectrum, taking into account all different time horizons and also various different emission scenarios. And we are doing all this on a 30-meter resolution to be extremely accurate. And I see people looking at the clock already. I want to show you the result of all our work, right? And this is what you can see here in the background developing. So this is the result of all the work that we have done together with our daughter company, Fathom, creating these flood models. And at Swiss Re, we do not just keep up with the evolving insurance industry, we actually shape it. And we are doing it since 160 years, giving us the possibility to stay ahead of transformation and apply our knowledge and expertise to design innovative solutions like this that help you not only keep up with the pace of change, but also lead it. And Gepa already said our vision is of closing the protection gap. And if I boil that down to our mission, this is crystal clear. We want to accelerate the development and deployment of world-leading risk solutions that redefine resilience. And with that, you can lead the charge in water risk intelligence, and we set the stage for the next generation of mitigation strategies, unlocking, and excuse me for the joke here, a flood of opportunities that are ahead of us. Thank you very much.